Nuvama met the management of IT company Firstsource Solutions. Reema joins us with the key takeaways of this particular meet. Over to you, Reema.
Thanks so much for that. So the first one is that the management is now focusing on stable revenues. If you remember, Firstsource's revenues were tied to, the interest rate outlook. They were very dependent on the US mortgage business. So when interest rates started rising in the United States in the last 12, 18 months, the fortunes of Firstsource were impacted. The stock, the revenues were under pressure. So the company wants to focus on stabilizing its revenues and make it more resilient even in the face of, uncertain, macro uncertainty. Secondly, they also want to focus a lot on cross-selling and upselling. The third key is they want to improve their margins structurally. So they're saying they are focused on optimizing the cost, driving efficiency, so that will take some time. One of the key levers that they have is increasing the offshore. So there is a focus on bringing down the cost, though it will take 2 to 3 years, and improving their margins. And finally, on generative AI, when Nuvama asked the management of Firstsource, they said it will take 2 to 3 years before any large-scale adoption of generative AI takes place. According to Nuvama, Firstsource is well placed to deliver industry-leading revenue growth with an improving margin trajectory. They have a buy rating on the stock, and they've put the target price at 250. Back to you.
Thank you so much for that, Reema. And just taking a look at the markets, the mid-cap index continues to trade 1% higher. So the broader end of the markets,